Welcome to a new update, and today we're going to discuss what's going to happen on the markets as the markets have been seeing a slight pullback. I've been mentioning that the Fed is probably not the most important event to look at. It might actually be just economic data, as a recession is still going to come, or the expectations are that we will be having one, through which the Fed can't continue their policy, but also through which the Fed has to change quite fast, as potentially with the rate hikes the recession is going to be more severe than expected. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter. Today we have been doing altcoin setups, which you can find in the description beneath. It's completely free, and we still have 1 week of the discount for our premium membership, in which we have been starting the onboarding of clients towards the copy trading solution. If you want to be part of it, we've got 30% lifetime discount on the memberships. You can find it in the description beneath, including the discount code. So in that regard, what we have been seeing yesterday was the jobless claims are still very low, which means that there is still some continuation on the strength of the labor market. But during the evening, we had economic data coming in from Google, Apple, and Amazon. And when we look at Amazon, they have been getting data which was worse, and actually way worse than expected, as the earnings per share have been dropping massively, and also the revenue has been going up a little bit, but the result was that pre-market, and that's actually after market, Amazon has been dropping by 5%. Apple similarly has been dropping by 2.3%, as they also had big misses on the data. And then we finally have Google, who has been getting some data as well, in which it has been dropping 4% after market by missing the revenues, by missing the earnings per share as well. So it's not looking too great for tech, which has an impact on the markets overall, which we have been seeing in the sense that the Nasdaq has been dropping from 12,900 points as a big rally yesterday towards currently 12,600, which is not too important at all at this point yet. But the bad earnings are giving you a guideline that the markets are most likely going to give you or going to continue correcting, as the soft landing conclusion might not be the actual answer to the policy that the Fed has been doing. Today, before I've been shooting this video, or after I've been shooting this video, we still get the unemployment rate and we get the ISM services PMI, which ultimately will be having an impact on the dollar as well. As we can see with the dollar, it's super volatile. We have been getting this massive correction run up. If it breaks above 102.1 points, we can definitely see continuation here, which is ultimately resulting into a continuation of the correction on the markets, in the sense that the Nasdaq and the S&P will be correcting from there and start looking a bit more weak, in the sense that we are going to have indices falling down a bit more. S&P still starts to rally. So the tech earnings were bad, and that has an impact on the Nasdaq. It also got some impact on the price action of Bitcoin, as Bitcoin is still stabilizing between a few important levels. So what have we been seeing? FOMC meeting has been taking place, rally upwards towards new highs, consolidation and probably correction afterwards. If we look at the previous event, we can see it here. We had an event with the FOMC taking place here as well, and the days after we started to see a substantial correction taking place here. So in that regard, if you are into altcoins on the markets, I think that you should be waiting for a decent pullback to be happening, as we can still have one towards the areas of 21k. And in this case, we probably are looking for some serious levels for rejection. And then we have to look at the lower time frames, which we can see here for Bitcoin. What we can see that the markets are at range low at 22.5, at range high at 23.5. Or actually 23.4. So this is the range we have been acting in, right? Right now we have got another breakout taking place, and if we reject at 23.7 again and lose the level at 23.3, it seems very likely that we're going to take the liquidity beneath the lows, and then you're going to look at 21k. So that's why the area around 23.4 is a super important level to watch. if we have to break down at 23.4, it seems very likely that we're going to have that fall taking place. So there are a few crucial levels to watch. It's either 23.7 according to the unemployment data which comes out after I've been shooting this video. If we have 23.4 as a losing game here, we're going to have a sharp fall, and that will ultimately result into the markets dropping and confirming this bearish divergence which we are currently building here, and is still unconfirmed until we start making lower highs and lower lows. Ethereum, same view. Potentially a bearish divergence here has been sweeping the high, as you can see, and in that regard it's very likely that we're going to lose some levels and start trending south. In such a way, we are looking at this area here at 1580 for a potential support and avoiding a bearish divergence to be confirmed. If we don't, then looking at this case for the short, and then a long opportunity is there. If we drop further, it's going to be 1450. So those are the areas that you should be looking at. In that way, if we drop 23.3, which could be due to unemployment data, it's going to be a painful case for the markets. If we break 23.7, we just continue rallying and the bearish divergence is invalidated. If you did enjoy this update, make sure to hit the like button, subscribe to this YouTube channel. I'll be going on a little vacation the coming week, so I will not be online too much, but stay tuned and also check out the discount. Ciao.